Hi friends, welcome back for another video. Oh, it's a bit windy, but here I am, like a bridge over troubled water, to bring you technical analysis on Bitcoin and Ethereum, and to check out that CME gap, which was filled quite quickly, as we said it would be, and to look at how we were ejected from the 50% retrace, as we said we would be on our first pass. And I don't know, I mean, do you think I should put spoiler warning on these videos? So there's like, spoiler warning for if you don't want to know what's happening in the Bitcoin and Ethereum in the next few days, then be sure to tune out now. I think also in this video I'll take a look at other things like Chainlink and XTZ, that's Tezos, and some couple other things that have been performing well lately, and see if we can fit that in. But I'll give you an update here when I jump back into the charts. Thanks for tuning in. Remember to like and subscribe, and I'll see you in the charts in a minute. Hi, welcome back to the charts. Now, if you look up here, I think it's that direction, you can see the Bitcoin versus US dollar 24-hour Bitstamp chart. This is where you look to see if on any video, by the way, as we're making it, where the top time frame is that we're looking at. You can see what time frame I'm looking at any given time, by the way, if you see it, this bar at the top, and you're able to make that out on your screen. And of course, I use a 24-hour rather than the one-day chart because it allows me to be sort of lazy in a sense, and I can see that there's 9 hours and 13 minutes left on the day. So that's handy. You know, it's handy for me to be able to see that, but I'm in the UK, so it really makes very little difference for me because that's what the time is here anyway. Whereas if you're in a foreign country such as the United States of America, you might find that a particularly useful timeline to have on your charts. Okay, so you can just add that in there. Right, so what are we looking at today? What's the chat? Well, the chat is that the high is, let's just go over here and I'll hover so I can see it. So we've had the open today was 10,173. The high was 10,199. The lows has been 9,731, and the current price is 9,876. Okay, so that's where we are right now. And if we want to, let's just zoom on in, actually make this nice and big so that you can see the blue line that we drew in a few days ago is right there acting as support currently. And of course, the price kind of came somewhat down towards the 10 simple, probably hit off of something like the 7 simple or something like that. Not that big a deal. You could probably also, if you wanted to be sort of silly about things, put in some sort of tiny little trend line like that. But that's, like I say, being silly about things. Okay, so right. Let me just get some sort of disclaimer out of the way. And I mention this in every single video, but there's no harm in mentioning it again. Prices on the charts, the price action, the oscillators down below, the candlesticks up above, the VPVR on the right, everything, the high lows, open closes, everything, all of this information is not predictive, okay? The charts are not predictive, and technical analysts who make predictions, like the YouTube people who you may or may not watch, who will be saying things like, who a couple of days ago were almost certainly will have been saying 11,000, here we come, who yesterday were almost certainly saying that breaking through 10,000, and we've done it for real now, we've done it for real, there's no chance we'll go down below, and who almost certainly are today saying things like we're going to 8,000 or whatever, something like that. They're making predictions about where the price is going, and that's not technical analysis, right? That's not technical analysis, not how this works. It's not what this is all about. It's all about managing your risk, okay? So I'm just making that really, really, really clear. And in terms of technical analysis, the best technical analysis is done when you do it from a point of view of how you would manage your risk. So if you would like to go and look at yesterday's video from about 6 minutes onwards, for instance, you'll see, in my opinion, my humble opinion, really accurate technical analysis that really did sum up what happened today. But I wasn't predicting what was going to happen today, okay? I didn't predict what was going to happen today. So don't be saying to me, my God, you're the second coming of Nostradamus. That would be entirely unfair. I actually just pointed out all the different areas where you manage your risk. Now, because I'm talking to people who are trading and it's YouTube and well, the language kind of, you get carried away talking about it, of course, as well. It does come across. You could hear what I'm saying and you could think, this guy's making really amazing price predictions and this is amazing what he's doing right now. but it's not amazing, and it's totally simple, and all of you can do it too. Okay, you can do it just fine. And the way you do it is by avoiding all that FOMO and all that greed, and just taking a few simple lessons from what I'm doing now. Of course, I'm your spirit guide. I'm not a financial advisor. You can I invite you to come and watch these videos every day so that you get to sort of keep up to speed with it. And at some point, I'll be tragically, heroically, farcically, face-palmically wrong. Okay, it'll happen. I'll be embarrassed. I'll cringe when I have to go and make my video the next day. But just in the same way that I kind of don't want to take credit for yesterday and say, hey, I'm like Nostradamus, because I'm not, and that's not what happened. The same way that I don't want to do that, I also don't want to be too embarrassed and stuff when inevitably it all goes completely wrong and goes pear-shaped. Okay, so like, anyway, this is the 40th video of my technical analysis, and I've not said anything wrong yet, so let's just try and hope that we try and keep that run going, because that would be excellent if we just did it forever. But anyway, yesterday what we were looking at was how if this was to turn into not being bearish divergence, then you'd kind of, although it was a counterintuitive point, you'd kind of expect the price to drop down, and as well, you expect the price to get rejected off of this on its first pass. Just these things happen more often than they don't, and you would expect as well that if it were to go down, that areas to be looking at for support, at the sort of the worst case at the minute would have been here, but could happen, of course. And the next stage was here if you were looking to open up longs, okay, and anywhere in between, obviously, and the 10 simple floating around in there is a sort of indicative of that. If you were to come down all the way down to here, that wouldn't actually even be, worst case is kind of dramatic sounding words that don't really mean to be, but that would just be a higher low overall. That's totally fine. And you know what else? If it came all the way down to even as far as, say, the 21 here at 9,300, that would just be another higher low. That would be also fine. Also, in terms of the grand scheme of things, if it did drop all the way down, if it had a wedge here and it broke out of it, for instance, not that you need it, but if you wanted a measured move of some sort, you could potentially say, an $800 measured move. Like, shall I just draw that in for argument's sake? Screw it, just draw it in for argument's sake. Since I'm talking about it, it only takes a couple of seconds to draw this sort of junk in. I think these things are stupid, by the way, but there you go. We use other forms of confluence here as Rocky Outcrop to really point these things out, but there's a wedge for you, a rising pizza, whatever you want to call it. Look at the subjective nature of these things is what makes me not like them so much. Also, their likelihood that they don't actually even play out is another reason not to like them. But anyway, let's just stick that in around about there. Gosh, it's like enough adjustments there. And up here, gosh, right? So between that price there, 8,800, and that price there, 8,100, you got a good solid $700 move. So say the prices were to break out of it from around about 9,700, then the price could go all the way down to 9,000 here on the spot prices. We're in around where we've got these supports, these various different things. For instance, here, where there's this top, it could come all the way down here as a measured move off of this wick, off of this wedge. Of course, as well, it could easily break out to the upside, which is not what it's supposed to do. And these are supposed to be reversal patterns, but they so often don't play out that I don't actually use them at all. And it could go up as high as, well, say it broke out from about here at 10,400, then it could easily come up here, hit off of this, get rejected from it and come back down again. But what would we be talking at that point? Well, we'd be talking about a golden retrace, wouldn't we? And at that point, why are we even bothering to talk about measured moves from wedges? I mean, really, seriously. So we'll just take that off. That's my opinion, of course. Why do I talk about that? Well, it doesn't really help you manage your risk, does it? It's not really trading. It's not really managing your risk. You can manage your risk by looking at these other factors here instead. Measured moves are fun. They're great and everything else like that. It's definitely a solid part of technical analysis. It's solid and does help you form your opinions, but does it really constitute managing your risk and trading in what I would consider to be the right way? Anyway, so really, what are we looking at the minute? Instead of gushing about how great we've been over the last wee while, what are we looking at? Well, it's the same story, isn't it? We've come down here. We've been supported. Are we going to be sitting in? Is this the higher low? This is the last low here. So anything between this point and this point would be a higher low. Could the higher low be sitting here? It could be. It could be. Could it be sitting as far down as here? Well, it could be. That's like, these are things we need to acknowledge. But could also this be it as far as it goes down and it just move up from here? Yeah, that could also be it. In terms of like fractal stuff, and I hate it, I don't want to, but it's worth pointing out as well, just like how these things have gone recently. after the up thrust and move, we've had small moves down the way in which you could have thought maybe that's our low, and then it's actually gone on lower. And you can see over the last few weeks that this has happened. So could it actually do something like come on down here and it be more or less the pattern that we've been used to in the way that the price action has been operating over the last couple of months? Not fractals, not fractals. Yeah, that could happen. That totally could. But anyway, what are we looking at in terms of like this being a high then on the charts, because it looks to be like we've set something in. Well, that's convergent there, so there's no bearish divergence there. These here are not lower, so there isn't actually any hidden bullish divergence really looking at that either. Worth pointing out, this of course is the daily chart. Let's look here. Look at that, that's getting up higher, so we're not getting bearish divergence. That's lovely. For this to turn around, we'd have no bearish divergence there on that, so that's handy. Will we have hidden bullish divergence? Well, I mean, you have to go back a little bit further in time to find the sort of the hidden bullish divergences. You can get it, say, for instance, here to this point here on the RSI and the stochastics and the MACD, but it's not so much visible on the other ones, right? On the more over the last low to high, to if this was to be considered to be our local low, which it may well not be, but it could be. And have we got convergence here in the MACD? Pardon me, across these 2 points? Well, we don't actually. Oh shit, sorry, excuse my language. We do. Terrible. But between, like, you know, between there is a tight is a tight call between this point here and this point here. Actually, no, you can see that we don't. It's maybe class B bearish divergence. Actually, it's just sort of appearing here. It's not really exactly. It could be classic bearish divergence. It could be, but we're not going to. We're in an uptrend, right? We're in an uptrend. Okay, that's the bottom line. I like to look at different things as well, compare Ethereum to Bitcoin and stuff like that, because the market tends to move together. I also like to look at CMEs and GBTC. I'm not sure exactly how much that'll do today. I've spent far too long talking about the importance of managing risk. And one of the reasons why I've done that is because some people were sending me articles, things like, oh, this Bitcoin, this breakthrough 10,000 is for real and stuff like that. And I just think that it's that you know, I don't actually watch other YouTubers and stuff at the minute, but I suspect that there's always a degree of hysteria. I'll probably get over pointing this out whenever we all get used to how we operate here as Rocky Outcrop, and I'll not bring it up all the time. But I like to bring it up currently at the minute how there's always a degree of hysteria in the market when anything happens, and it's as much about clickbait as about anything else. But you know, whatever. These guys make more money probably from clickbait on their video titles than they do from actually trading, and that's the difference between an analyst and a trader. You know, and in this group, we're all traders. That's what we do. So I'm just trying to figure out here as I'm talking and slowing myself down in the process, if we're looking at divergences or whatever between this point here and this point here. Across the board, you've got hidden bullish divergence. Is that worth pointing out? I actually think it probably is. We're in an uptrend, and that's convergent with that. Between these 2 points here, on the MACD, there's bearish divergence. Are we seeing that playing out just now? What are we looking at in the stochastics? Is that divergent? No. You can see here, just ever so slightly peaks up above it. Technically, it's not, but it's close. It's close. And on the RSI, well, you know, no. You have to look back here to these other sorts of points. And of course, we've been managing to make it up above all of that. So that's all good. Right. So I think I'll just kind of leave that off for now. What we're really looking at, like targets and everything else, it's like it is hard to identify really at the minute. We did think it'd be rejected off of this on our first pass. And could we get up there and then retest that again? Sure, we could. What we're really looking for at the minute is to see whether or not we end up going down as far as this 9,530, and if we'd need to fill the gap. Now, the gap that appeared on the CMEs that we said would appear was filled immediately in a wick that didn't get fully represented on the spot prices, as we said, is actually quite likely to happen. And see, because we can see there was an $800, $850, nearly $1,000 if you want to round it up, dollar move, 10,360, something like that, down to 9,500 or whatever. Move on the CME chart. So you've got this big gap here. It was filled immediately, back up again, and the price is living currently actually within where that gap was, and being supported by the 21. So there's this sort of fairly heinous wick, and it wasn't represented on the spot prices as heinous as that, which is what we kind of expect to happen. Still on the 4 hours, going back to the 24 actually to make this more convenient for us, and I can point out where's November the 4th. Quite a lot closer. So in and around here. Yeah, see this one there, that heinous wick there. that filled up this gap, which on spot prices at the time, in November the 4th or so, was not shown. Yep. So do we see anything like that happening now? Yes, we do. Again, that's not a fractal. That's not what fractals are. That's just telling you how things go in general, how these things go, like what the rules are, what we're looking at. Okay, so right, so there's that part. They can look at GBTC and see if they've got one of their stupid gaps. That's British pound versus Japanese yen. Well, since we're here, actually, how's the British pound doing versus Japanese yen? It was quite crap recently, excuse my language. We saw it coming up here and said, hey, actually, where was this? December, January. When was I analysing this? It's maybe around about here. Not sure. It was Euro I was looking at. Well, anyway, it's the same on the GBP. We've got this significant resistance. I think we're here. Sorry, this is meant to be a crypto video, but I'm going to stick that in there for now so that we can see it in the future. Why did I do that? Well, I think it speaks for itself. If you want to know more, then leave me a comment down below and we can discuss horizontals, resistances and stuff like that. Where is the GBTC? There it is. I've made a tag on it. You can put tags on things to make things handy for yourself so you don't spend ages looking for stuff. Handy tip. So anyway, gap here. Well, 24 hours gaps. No, we're doing all right. There's any gaps that were here or whatever have been filled up. If there was a gap here, which, in all likelihood there may well have been when trading started, when it just actually started up, it's already been filled today in the 1 day, so that's fine. So we just move on with that, move on with our lives. How does this look like? Well, I mean, we've still got this sort of pizza formation here, and we're currently above resistance here. Right now, so everything's looking fairly healthy on that front, but of course the bulls have got the ball in their court still. That's where it remains. Inaction from the bulls tends to lead to entropy in the prices, and it would drop as a result of that. That's just essentially how these things go whenever you're in a trend. So let's say we have a look at a few different coins, like Litecoin. Litecoin, right, can sum that up by saying same as Bitcoin, really same sort of deal. This pattern here that we're looking at is essentially going to be dictated by the Bitcoin prices. Note here as we go through this different coins thing that we've got on today's candle a red candle, and why in every video as I go forward I'll always start with Bitcoin, because Bitcoin is the daddy in this market, and this is how these things go. We've come down, we're being supported off the 10 simple. Do I think that if Bitcoin prices were to surge up, would this continue to go up too and Bitcoin could carry up in the market? Yes, I do. Am I wanting to add in some horizontal lines? Sure, why not? We're here. This here is probably a fairly obvious point at which obviously the price is around about currently, but that's our first port of call in terms of resistance right now. If we're able to break that, where would we be looking to go up to? Well, I think the next one here would probably be around the $85 sort of area, between 85 and 90. In fact, for this one, I probably actually want to have a Fibonacci retracement on here as well. But so you're looking anyway, just immediately sort of this sort of area. And let's stick a Fibonacci on here as well. I want to make this accurate, but I also don't want to waste time doing it. So, it's a bit of a dilemma, that one, always. So I've got that in now. Move the prices back down a bit. Let's have a look. Well, obviously we made it up past this area like we probably would have. And the reason I did that from so far away, by the way, is because I want to take into account this entire downward move for months and months and months. I mean, we're looking at the daily here for a reason. I don't want to mess around with rubbish ones. What have we got? Confluence around the blue lines. It's not a coincidence. Honestly, it's not a coincidence. But look here, we've got the very first part here, the first part of what I like to refer to as the golden pocket, even though the golden pocket actually is just between where my crosshair is now and this line here. We've got all of that up here as the profit taking zones, right? We've got our first one and we've been rejected off of it slightly. Is this a story that we remember from anywhere else? Yes, it is. Let me just take a moment to go back over to Bitcoin and point out to you how you've got your very first retrace point on the Fibonacci. This is what confirms to you you're actually doing something right and you're not wasting your time. But beyond that, it's not very useful. Then this here is the very first line on that profit taking pocket. Oh God. That I talk about, where you generally get rejected from. And did we have that? Yes, we did. And was it hard to break through it? It kind of was. And when we did we come back down to it? Yes, we did. So all those things happened, and we retested it, and then we moved on up from there. So you can see then as we look at Litecoin, that potentially it's got a similar sort of setup happening for it in the near future. Could we be experiencing that rejection right now from there? Yes, we could. Could we come back up? We'd be first off obviously looking to get above this line and this pocket here, and then try and move on up after that. In the in between times, you've got areas to look out for, like $83 as well. Pardon me. Where you'd be looking at, have we got divergences down below? Nope. Nope. Hidden bullish. Yep. Just a little bit. Hidden bullish. Yep. Divergent. Well, depending on how this goes, there's a bit of divergence, bullish divergence on, or bearish divergence, BAR, bearish divergence on the MACD. This oscillator likes to throw out divergences like there's no tomorrow. And there's also hidden bullish divergence, right? There's the two of them at once. Yet another example of having two divergences on the one chart at one time. I'm only going to do 24 hours on these other assets because I'm kind of introducing some of them right now here as a newish sort of thing. What else did I want to do? I wanted to look at Link. Yeah, everybody likes a bit of Link. Link is great because it's a shitcoin with a product. They call them shitcoins. It's an altcoin that actually does something, as opposed to talking about how it wants to do something. I'll look at one that just wants to do something in a minute. Again, look, this is no coincidence. We've got this this red here. We've got this sort of almost wedgie type thing, but it isn't quite wedgie because it doesn't work, right? Because wedges are crap in the first place, and it exists on Bitcoin, but do we even care? Could we do a retrace on this? Well, I mean, from this point here to this point here has already gone past it, and it's up at the next thing. Could we do one on its entire lifetime, from its all-time high ever down to, well, what, down here at its all-time low? We could. Fundamentals don't get taken into account when you're looking at this sort of thing, kind of in a way, because, you know, between, like, did Google got involved in them in around here sometime? I'm not really sure, here or something like that. They got or there's some fundamental stuff happened, changed with them. Shall I stick a Fibonacci on it anyway, just for the crack, since we're here and we're looking at it? I just got that slightly wrong, so I never take these numbers for as definites anyway, and I certainly wouldn't start now. But look at that, we've come down and we're being supported by the 50% retrace on this one, and we've got a target in mind of 3.6. This is versus US dollar, right? So $3.60 or so. When that happens, if you're invested in Link, then I would be keeping my eye out for what's going to be happening with the price. That's a big retrace point here, something to be worth looking at in and around that. Shall I just fix this? So whatever, just like it's up a tiny wee bit. That'll do. So we'll stick this line in here just so it draws our eye a bit more, and say, hey, look, you know, this is something to be wary of. And in the meantime, this here is something that we're being supported by. I don't actually like covering up these things though, so I think I'll not do that, and instead I'll stick in an additional one where maybe it matters. It's actually hard. You've only got really 1 point here, and here again, you know, is this traded primarily by bots? Looking at this Fibonacci, you know, possibly. In fact, you could probably do more Fibonacci's down here, and it's probably got a lot of robot activity in this market. Robots respect the laws of nature more than humans do. Here we are, and we've been supported by the $3.25, I guess, area. We're looking to try and get up to here. This is the range. Do I ever like taking longs or shorts when you're in the middle of a range? Not really. If I was looking for good entries or exits, it'd be in those 2 points there, and I wouldn't probably not bother wasting my time in between times. Would I regret it if it went up to here and I hadn't got in? Not really, because we know what trading's actually all about. It isn't. We're not going to be experiencing FOMO, because that's exactly what that would be, and we're also not going to get in now to avoid FOMO, because that would probably be called greed, right? Let's take a look at Tezos, because I mentioned at the start, I think I said XTV, but it's actually XTZ is its ticker. XTC, ecstasy. So they're all for it. Anyway, look at this. This is kind of going parabolic at the minute. That's great. And we could probably do like extensions on the Fibonacci's and stuff like that and look way up there. But we're talking about a coin which has got no history, almost no usage, almost no basis for ever doing any of this. The things that make it good are that you can do staking on it, I think, at the minute or something like that. Also, they've just had a raft of publicity. Also, it's probably got a Binance CZ pump and dump scheme on the go at the moment, because when you list your coin there, they promise you a certain number of pump and dumps, which is currently, I think, not illegal in the market, but is obviously illegal in traditional markets. Now I'm going to just put that in there as an overhead resistance thing. We're having to do some sort of blue sky thinking with this one. So are we experiencing divergences at the minute? Well, not really. Are things looking fairly toppy in this sense, like in terms of how the RSIs and everything else are going? A correction would be natural, possibly, but I don't feel like necessarily we've got divergence or anything like that to be working off of. Between these points, certainly won't be. Maybe there's something on the go here to be looked at. Is that potential for hidden bullish divergence between lows? I mean, is it? No, not really. Is this just is this a fake money rise? Could be. Is this a real thing? Could be. I mean, I suppose maybe you have to look at what even the reason for the existing is in the first place. So I suppose I'm not really much helping there. But here, look, if I was trading it, I wouldn't want to get back in again unless it came down and tested in around that area there. Necessarily. I suspect, when you go up to these things, we're quite in this sort of this zone where we've done well. We've avoided having any. Look, we've avoided having any divergences. We don't really have any. We've done great. So our job is done for now. We can take the foot off the accelerator, buy more in down there. If we were accumulating, if say we were a whale or something like that, and we wouldn't actually have any sort of negative impact on what we're printing on the prices. And do I feel that some of this is somewhat being printed? Well, there's a degree of exuberance here going on, but there's also probably a lack of trading. We can see that the trading only really kicked off here. This is what we call starting volume from a Peter Schiff. No, not that guy. I hate him. Peter Brandt point of view. Have we seen any stopping volume as yet? Not necessarily. The volume's rising up as we're going up here. Might be interesting to keep our eye out for that over the next wee while. Let's have another look at a project which doesn't actually have any reason to exist quite yet. OneCoin. Although I kind of like this one for some reason. I think it's kind of irrational of me to like it. I don't know why, you tell me. I like it though. So what are we looking at here? Well, we've kind of got resistance here. What would we have said? Where was the resistance really at? Have we broken this or not? No, we haven't. We tested it and we're rejected back down from the 200 simple. Look at this. This thing's so young. It's only really had the 200 simple on it for a wee while. So what are we looking at here for this? Well, essentially, are we going to get supported or are we not? Is this enough of a pullback? And do we want to do a Fibonacci retracement? I could do one from its entire lifespan, or I could do one from that point there to the bottom. I'll mix it up a little bit and not do an entire lifespan one on this asset. So stick that in like that. What have we done? Oh my God, we've hit the 618. I mean, are you starting to see patterns as I do this sort of thing? I'm sure you are. I hope you then, want me to remain as your spirit guide. Anyway, we've hit off of that. We've come down. We're being supported technically by the 50% retrace. We're still in the midst of having to decide where we're going. This is essentially the only place that any trading activity has really ever happened is around this price. Does that mean that's the price of it? Possibly that's where the market wants it to be. Could we see us going back down here? This has been a long period of sideways. This does look somewhat like a bottoming type formation. We've come down here and jumped back up again to give you very little time to get in at the bottom. It's very bottom trough. Have we got divergences on the go here? No, we haven't, not really, but you could say that between this point here, if it's peak, and this point over here, that that is not impressive exactly, and it's also divergent. We really do want the price to come back up here and to go and create highs over this area here to avoid having divergence here. We could still be in a downtrend. Essentially, the whole asset has only ever been in a downtrend for its existence. So, not much point in drawing channels or anything else in there or over analyzing this asset, but that's what we've been looking at there. And is this something therefore that could be turning this around? It could be, but we've got some work to be done yet before we get past, because we've got this divergence here. And it's fairly obvious. 1, 2, 3, 1 here. And on the MACD, the MACD's not showing it. Now, the MACD being the one that loves to give on giving and not giving here is fairly interesting that it isn't there, but have I got anything more to say about it than that? No, not really. Not going to start breaking that down and trying to explain what I mean about it. The price currently is in this pocket here. I'm looking for it to get above here and establish itself above 0.0653. What's this? Versus Tether. Good. I didn't want to be talking about versus Bitcoin at the minute. and then you'd be above this resistance here, and you'd be looking at whether or not we can actually break above the 618 and go on up. If we don't, then of course the 618 is where you would hope to see it come to before you continue on a downtrend, and in which case, if I was looking for longs, I'd be looking to get in it down at these areas down here, of course, and then if the price comes down here and breaks below this price here at 0.05, then I would be very much worried indeedio. Anyway, that's enough for that now. I suppose we can revisit these things in the future. Do you want me to look at anything else? You've got things like Ripple. This is Ripple versus Bitcoin. Have I not got Ripple versus dollar on the chart on there? Nope, doesn't look like it. Doesn't look like it. Let's look at it versus Bitcoin for a bit, right? Let's look at it versus Bitcoin. Let's have a wee look. Let's see what we see. What do we see? We see that investing in Ripple and hoping that you're going to do better than you would do versus Bitcoin is, generally speaking, a atrocious decision. Let's look at it on the weekly so we can fit some of this atrocious decision actually onto the charts. Yes. Apart from for some few days of every year or so, that doing that is a fast way to lose money. A fast and consistent and long. You can lose money for a long time doing this. If you're on BitMEX, right, then you would be trading versus the Bitcoin, right? Bitcoin obviously is your base currency, but it's versus it's not like Ethereum and Bitcoin, which is why I've got this here, because I think I probably put it on when I was looking at BitMEX at the time, or in anticipation of doing this exact thing. So if you're trading this on something like BitMEX, then I would recommend caution. Now you go left to right on Fibonacci retracements, so there's me doing it that way. How about we just actually retrace the downward side and see how badly we've done instead? So this is again mixing things up, so this makes it interesting, doesn't it please? So yeah, let's just drag that right the way over. Da-dang. And what are we looking at? Crap. Right, we've come all the way down here. There's nothing to be said about that. That's just a big waste of time. Bitcoin, would I invest in it versus Bitcoin? Would I or would I not? Well, if we're going to be saying anything, let's just see. Like, we've got a somewhat of a bottom type formation here. We need a double bottom here, have we? Right, we made a double bottom here on this chart here, and are we trending up on these oscillators? We're trending up here. We're trending up. Could this be the time, after me taking the wee out of it there for a second or two, where we actually get something positive on the go for this crap coin? I feel like potentially it is. Actually, let's go ahead and just commit to that idea, right? Let's commit to that idea and take that off again, and find out. That's our hypothesis, okay? And in science, what you do is you come up with a hypothesis, then you work to try and disprove it. So what you do is you say something like, I have a hypothesis that humans need oxygen to survive. Then you deprive a human of oxygen and they die. That is proof that your hypothesis was correct. You try and disprove yourself. That's the scientific method. So let's just go with that. Let's use some scientific method. You've been fast and loose with my metaphors here. All right, okay. So you can see, though, actually, as we come up here, we've hit off the 382 numerous times, and we come down and we haven't achieved the 236. What are we looking for in order to this Fibonacci retracement that I've drawn here, which is rather useless to work because it's currently useless? Well, we need the price to come up to here and live above it. That's 0, 0, 0, odd, like a bunch of zeros, 7, and the price at the minute is a bunch of zeros, 2. So you're looking at the price going up by somewhere between like about 350%. 3.5 times the current price, so there'd be a hell of a lot of opportunity if that were to happen. Would I expect it to be rejected off of here in the first pass? Well, yeah, sort of, it would probably. But then you'd have made a stinking amount of money doing that, so that would be decent. And then after that, what we're looking at would be between these 2 points here, of course. Now you can see there's a big node here on the VPVR at this price, so you could say there's probably a pocket in here of some sort. And are we seeing wicks and stuff like that? Yeah, we are. So you could sort of draw one in, but I don't want to clutter this chart up too much just yet. But there's that there, there's that there, there's that. Yeah, okay, I'll give it one. Right, I'll give it one. We'll go in for that. Pooh. So here we are. Oh, I was looking over here at the prices. Shall I move it down to where that node is? I mean, do I like it? Do I like doing that? Nah, I don't want that. That just happens to be where that node is. That's different to different concept. Right, so Yeah, so if we did come up here and touch this is a bunch of 0.7, then we'd be looking at it then going up, and the question becomes, can we get above this bunch of 0.8 number before going back down to a bunch of 0.7 again? If we break it and come up and down, that's what I actually would expect to happen. If not, failing that, we're going up to the very start of the golden retrace thing, at which point I would then expect it to be rejected from that and come back down, and it would give you new opportunities to get in and out and manage all of your trades and your risk in and around all those levels. Down here at the bottom, if this has been double bottomed and we're not coming back down to here again, then that would be that. But what are we looking at in the first place? Well, I don't know. Let's get down and dirty with this one and look at it on the 4 hour. Give me this auto so I can wrap this up. How long have we been at this? 35 minutes? Whoa, way too long. Right, I'm not spending any more than 10 seconds on this. Right, okay, down here, supported by that. Right, spending that's about 10 seconds going, are we doing okay? Right, no, this candle here today has been its savior so far over the last 4 hours. Any further down here on this and it's looking crap and it's going down further is essentially what I'm thinking. I don't like that. I don't like what it's doing. I don't like it at all. So would I want it to come down here and touch off the 200 simple and this big node down here on this part that we're looking at? Yeah, I would overall if this doesn't actually just signal the end of it there now. And my thought process is being that you've got a sort of support area in and around this area where the price potentially has been supported by, and potentially that's close enough to the 200 exponential, and maybe the 100 cyan is going to just be enough for us on the 4 hour. There isn't any sort of divergence to be like saying, yes, this is going to save us here. And we're in a downtrend at the minute, so we're looking at the bottoms, and they're all indeed lower than each other. When you get right down to the very bottom, it tapers off a wee bit, and we've lost that momentum. And in terms of the ups, there's potential for a degree of there's hidden bearish divergence on the way down. Not really. So the continuation is dropping off on all of that front. So could that be it? Could we be looking at something positive here? Potentially. Thankfully, just considering over that last wee while. But if not, then down here and a bunch of zeros 2.6 versus a bunch of zeros 2.7, that's still a significant percentage difference there as well. I'm sorry, I've not got very much to offer today on that front because I really just can't be bothered looking at it all that much, really. It's a million miles away from what we've been looking at, and I just did it on the daily, and that's that. So I'm just going to go back over here to finish up. Okay, so we're back at 9,909. How lovely. So if you were able to take any longs off of that area there, then did you do the right thing? Yes, you did. Is there hidden bullish divergence? Yes, there is. That's a sign of continuation. That's a good thing. Was there hidden bearish divergence? No, just straight up in your face bearish divergence? Not really. Not on this small time frame, apart from over here, which you could say that there was, but we're in an uptrend and it's class B anyhow, so it's not particularly strong. Could the play out from that have just been this? It could be. Could it go on down to here? It could very well do so. If it did, would I be looking to manage my risk there by stopping out at that point? Probably not necessarily. I would be more concerned about things if it went down past this sort of into this zone again here, essentially. Just like living inside this area here wouldn't be so great, but of course anything's possible with that wedge, that fantastic wedge that you got on the chart. Let's just wrap it up at that, and let's hopefully I've helped somebody at some point. I appreciate that things have got a wee bit esoteric at times and a wee bit kind of scattered, but that's me done a bunch of different coins, so that's maybe why this is more than twice the length of your average video. Pop. Okay, see you tomorrow.